What are the assets and liabilities? Assets and liabilities are two fundamental terms used in accounting and finance to describe the financial standing of a business or an individual. Assets are resources that are owned by a business or an individual and have economic value. Assets can be tangible, such as property, equipment, or inventory, or intangible, such as patents, copyrights, or trademarks. Assets can be used to generate income or provide benefits to the owner. Liabilities, on the other hand, are obligations that a business or an individual owes to others. This can include loans, accounts payable, or other debts. Liabilities are amounts that need to be paid back to creditors, and failure to pay them can result in legal action. The main difference between assets and liabilities is that assets represent what a business or individual owns, while liabilities represent what they owe to others. In other words, assets are the resources that a business or individual can use to generate wealth, while liabilities are obligations that can reduce wealth. A key metric used in accounting to measure a business or individual's financial health is the balance sheet. The balance sheet lists a business or individual's assets and liabilities, as well as their equity or net worth, which is the difference between assets and liabilities. In summary, assets are resources owned by a business or individual that have economic value, while liabilities are obligations owed to others. The difference between assets and liabilities is an important indicator of financial health and is often used to determine a business or individual's net worth. Here are some examples of assets and liabilities. Assets. 1. Cash and cash equivalents. This includes cash on hand, bank accounts, and short-term investments. 2. Property, plant, and equipment. This includes land, buildings, machinery, and vehicles that are used to conduct business operations. 3. Accounts receivable. This represents money that is owed to a business by its customers. 4. Stocks and other investments. This includes shares of stock, mutual funds, and other investment vehicles. 5. Intellectual property. This includes patents, trademarks, and copyrights that a business owns. Liabilities. 1. Accounts payable. This represents money that a business owes to its suppliers. 2. Loans and other debts. This includes business loans, mortgages, and credit card balances. 3. Salaries and wages payable. This represents money that a business owes to its employees. 4. Income taxes payable. This represents taxes that a business owes to the government. 5. Accrued expenses. This includes expenses that a business has incurred but has not yet paid, such as rent, utilities, and insurance. It's important to note that assets and liabilities can vary depending on the nature of the business or individual. For example, a manufacturing business may have significant machinery and inventory as assets, while a consulting business may have little in the way of tangible assets, but significant intellectual property. Similarly, an individual may have assets such as real estate or investments, while also carrying liabilities such as a mortgage or student loans.